Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Monday, July 22nd, 2024. I put in the morning notes, I was expecting some kind of bounce today, and it was pretty easy trading. And I walked away with 38.50 for 10 contracts because I had to run out, and I just put a trailing stop on it. But I'm going to show you the sequence of events or text messages and in a trading room that went down. Because the people listened to what I was saying and didn't put in a $2 trailing stop, made anywhere between 10 and 12,000 for the day, and this is off of a trade that cost 15,000. So if you made 10,000 on it, and that's a pretty good day. So let me show you the sequence of events here. So at 9:17, I'd said I'm on the side of selling puts on dips, meaning that you're shorting puts. I mean, you don't believe the market's going to go down. So that's the credit side of it, and then debit spreads, because I see 5,600 coming into play before the next battle starts. So that's at 9:17 before the market's open. 9:48, I expect the bears to fight between the 55.60, 75.83, and then I would love to see a head fake down to the 55.35. So this was when we had the S&P opened up, we had the gap up, we went up to the 52.60. Now we at that particular point, we were at 10.12, yes. So basically what happened was we had the gap up. We were not in the trade yet. So we came up to the resistance, and this is where I put out, I'm hoping for a head fake back down to the 55.35 to be able to get long. And this is pretty much exactly when we got long right here. Well, we did a straddle, meaning that we didn't care if the market went up or it went down. We just needed to move more than 15 points from here. And the reason why I took this is we had a volume spike. And like, as I've been saying, I pretty much, I trade market neutral, because no matter what indicator you have, whatever, you're going to get these head fakes and you're going to get caught on the wrong side. And I would rather give up some profits rather than run with 100% risk. So we took as I said, we took the, let me get back to this here. We took the 55.45 puts call and the 55.25 puts. So it was a $16 debit. So the only thing we needed was for the S&P to move above 16 points. Now, after that, I had put down so this is at 10.12 that I put out the alert to buy this straddle here to 55.45, 55.25, and at 10.44. This is when the S&P was back up to the 55.60 again. I thought it was going up to the 55.70, but I said, I'm going to use that to close both ends of the calls and the puts, because the trade was up, I think at the time, like $9,000 with the 10 contracts. So what happened was we got up and we hit our head on this resistance, came back down again, and again, I didn't really care. I mean, I would have liked to gotten out right here, but the thing is that if we were to break through this stuff, then we were coming all the way down to the 54.96, and we just would have made the money on the put side. So I wasn't really stressing out, but then we started to move up, and if you look, the exact high was 55.70. So our members knew from 10.12 where what to take and buy, and at 10.44 where my target was and what to do with it. So things worked out pretty good, and as I said, hang on one second, sorry about that. So as I said, anybody who held on to the trade, I got filled. I had the trailing stop. I got filled at 18.30, and this made it all the way up to the to 25.85. So if you remember, I made 38.50. So I mean, it was close to a $11,000 gain, and again that's only in probably an hour and a half, 2 hours. So if you put 15,000, that's what you needed to make that trade, to make 10,000 in a couple hours. I mean, it's pretty good. And the thing is, it didn't make a difference to me if we were going up or down. That's market neutral. Now, once this dies down, then we're going to be able to start doing credit spreads again. But the market's just moving too much, too high, too fast up and down. So you're just going to get stopped out. And that's really what, just being in the business for so long and seeing this, you just kind of get a feel for it. So things worked out perfectly. This was the reason I was looking for the bounce. We had the bullish divergences. We had the S&P that closed right at the 50-day, 200-day moving average. And so that's why I was looking higher. I knew we were going to have some head fakes. We got it. This is why I was thinking 55.70 is we had the 38% retracement, and then we have the 50% retracement with the moving average right here with this price resistance. So I knew it was going to be pretty hard for the bulls to get through this without taking a break. But now we have some bearish divergences, so we may get a pullback tomorrow. I'll tell you what. Let's see what the futures are doing. That'll give us an idea. -7. So there's it would make sense if we did get some kind of pullback, and if we do, this is what I would be looking for right here. So this is the low, this is the high on it. So basically, if we get it here, you can see we have basically 1, 2, 3, 4, 5. So we have 5 waves up. Seeing a 50% retracement, 55.33, 55.25. This is where I believe the bulls are going to try to defend right here. If they lose that, then we have price support at 55.20, and really the last line in the sand is going to be the 55.12, because after that we're coming down and testing these lows. On the upside, it's if we head higher, you can see the 55.83 is resistance, and then we go all the way up to the 56.04. I believe we're coming up to these levels here before week's end, but that is obviously subject to change in this bipolar market. And if for some reason the bears come in fighting tomorrow and they can get through the 5,500, then I think we're coming down to the 54.28. So stay open-minded right now. Things are kind of messy, but there's definitely money to be made. And so far, the AI stuff that I've been following has been doing pretty good. So with that, have a great night, and I'll talk to you guys in a moment.